Hey everybody, and welcome back to my channel. But before we start, I want to quickly share this with you. This cup, and I love coffee by the way. This cup that I'm drinking it in is a memorabilia that I got from a town called San Sebastian, northern Spain. A beautiful, beautiful port town. So if you guys are looking to visit somewhere, I would highly recommend the city. It is beautiful in terms of old town charm, beautiful beaches, lovely, lovely people, and it's very rapidly become one of my all-time favorite places. But before you all get out and run there, let's get to the charts. All right. So on the charts, what I present to you are three setups that me and my community not only identified and got involved in. But if I showed this to you just the way it is right now, it makes no sense, right? So how are you entering on these trades? What is going on, right? You are entering in the middle of this candle, you're entering in the middle of this candle, you're entering in the middle of this candle, and how are you capturing these runs? Well, the whole concept is very simple, and before I explain to you that concept, I want to shamelessly advertise my Discord community where I do daily markups of all the trades that are potentially available for us to trade. You can read about them, you can see they're all through a mechanical edge, they're all mechanical entries. We have a good chat, it's a brand new community, so we have good engagement. We also talk about daily trading setups, and a lot of these guys are hitting it. We also talk about gold, and you will see a lot of these guys interested in gold and are banking it, yes? Okay, so coming back to our charts, what I want to explain to you today is how do we get involved into these trades. And before we go into the whole explanation of this, there is a very important, simple concept that you guys need to understand, is that market is fractal. So if I were to explain this or show this graph to you the way it is written right now, the way it is drawn right now, and there was no markers of the time over here, there is nothing over here, could you tell me what time frame am I looking at? Just by looking at the candles? Absolutely not, right? This could be a daily chart, a monthly chart, a weekly chart, a 5-second chart for all I care, but you will not be able to guess. There is one thing, however, common across all candlestick charts, is they have wicks and they have bodies, right? And the way the trend forms is that you have continuing candles in the same direction going either bearish or bullish. And majority of the time there is a wick on top if they're going bearish, and there is a wick at the bottom if they're going bullish, right? Our job is to identify how do we capture these wicks in order to catch the trend going in the direction or the bias that we had identified. And in order to understand that, you need to understand candle theory and supply and demand. And the reason why I say this is because the entire market moves because of supply and demand. You can argue with me, no, that's not the case. We have these Fibonacci series and we have these golden ratio numbers, but think about this for a second. Yes, you can take a pattern and superimpose it on a chart, and majority of the time you will confirm your bias that the price is moving because it hit a certain level, but it's not because it hit a certain level, it's because it went to a zone and it reacted from a zone, a supply or demand zone, and it reacted from a zone. That's how trading works. I sell you euro and you sell me dollars, or I buy your dollars and you sell me your euro. That's trading, right? And the visual representation of that exchange happens on these candlestick charts the way you're seeing it. So there's no pattern per se. Yes, you will identify patterns and they work majority of the time, but patterns don't necessarily or don't move the market. Supply and demand moves the market, right? And that is true with any business or any industry that you take. If there's supply, there's demand, and based on the interaction of both, there is price set and people do business, right? And the same thing happens on these charts. So in order to identify, or just one more explanation before we go and analyze this, is why do price increase? How do we identify these zones? And the way we can explain this to you is through this, and I had drawn this. And we're going to take a very simple example. The example is we want to buy 50 mangoes, right? I love mangoes, I'm sorry. And we're going to buy 50 mangoes, right? So if I were to go to the market, let's say we go to supermarket 1, supermarket 2, supermarket 3, and supermarket 4. And the first supermarket has only 10 mangoes at a price X, for example, right? I need 50 mangoes, but they only have 10. So I say, give me everything at the price level that that supermarket is telling me. Fantastic, okay. So remaining is 40, I go to the next supermarket and they have 20 mangoes left in their stock. I say, give me all your 20 mangoes, but the price increases now, it goes to X plus 1, right? Because this supermarket is selling it at a little different price. So now I have 30 mangoes in the bag, I have 20 left, and then I go to the next one. So I buy 10 more, took his stock out, the price is further increased to X plus 2, and then I have 40 left, and then I go to the last supermarket and then I get the remaining 10, and the price has risen to X plus 3. So I got all my mangoes, but the price of the mango has gone here, right? Now, if there are no more buyers in the market, this price will drop for new buyers to come in and buy it at this level, right? And that is how supply and demand works. These guys, when we place an order, it's an instant fill, right? Because we are retail traders and we will always find somebody on the other side of the trade to instantly fill us in at the price that we want to be in. So if I do a market execution button, it instantly fills me in, yes? Now, when banks and financial institutions get involved, they're not necessarily looking at the charts, right? They're not looking at supply and demand zones, or they're not looking at Fibonacci series, or this is a structure level, I want to get there. No, they want to convert, or they want to transact millions of dollars in a day. It could be for whatever reason, right? So they're maybe opening or doing a business somewhere in Singapore or Japan, and US needs to go and buy yen over there in order to transfer that cash. And so international exchange, that's how it works, right? They're not really looking at Forex per se. There is a department that looks at exchange. But let's say if I wanted to do a massive business and I want to send millions and millions and millions, hundreds of millions of dollars, I will go to the spot market, do an exchange, get the currency in the other country, and start doing my business, right? So I'm not really worrying about the price levels at that point in time. But when you put in that much money into the market, typically what happens is that you don't get filled in immediately at the price point for all that amount of cash at the time of execution. You fill in the orders, price moves up, then you get the next guy, a bunch of guys who are selling at this one, price fills up, then you move to the next one, similarly to the mangoes, right? So you keep moving up the price. And these are the guys that, it takes hell of a lot of cash to move the market even by one pip. So when you see these big giant candles get involved, we know for a fact that there is a large financial activity that has happened from financial institutions or big brokerages or banks that has created that fundamental move of that many pips in that price. Yes. So our job is now to figure out where are these zones, which means that there are still buyers who are left over here. There are still orders that are pending because this guy was out, right? So now the price is coming back. Yes. He gets in more stock, and we are still buyers here who wants to get in and buy it at that price, and then you move in to the direction again. So when you have that impulse move, 50 mangoes, this is me, financial institution coming in, everything is swept up, price starts falling in, new buyers coming, and they want to capitalize on the best price that it was, and then move into the direction they want to trade in. So coming back to this, how do I get involved, or how does my community get involved? It's very, very simple. You need to understand that every candle, a large candle, a daily candle, 4-hour candle, 1-hour candle, even a 1-minute candle will have a trend within that candle. So you will have seconds worth of trends in a minute candle. You will have a minute worth of trend in a 15-minute candle, and it goes and so forth, right? So if I took a daily candle, there will be a whole trend of 15-minute candles or 4-hour candles, right? And our job is to figure out that if this candle has printed right here, I am seeing or already imagining that there is a 1-minute trend in this candle. And if it is a 1-minute trend in this candle, do I get those supply and demand zones where price is going to gravitate towards and then get involved in those trades? And that is the whole premise, right? I want to catch the wick understanding that there is already a trend established on the 1 minute, I go to 1 minute and I want to capitalize on this wick and move in the direction of the moving train. And I don't want to trade against this. The reason why I know it's moving in this direction is because we already have a confirmation bias that the trend has already established. It has broken wicks to the left-hand side with a solid candle body close, and I'm 100% wanting to get involved. So what is it that what I do? I draw a box around it, the first thing that I do, and then I move to my 1 minute time frame zone. And here we will quickly explain the mechanical entries. And by the way, again, guys, this is something that we do on a daily basis in the Discord, right? We will identify at the end of the day, both for EU and GU, all the trading opportunities that were there for that day, exactly mirrored to the entry models that we're looking at. So this is, in a sense, one of the best ways because everything is mechanical. There is no subjectivity involved in this. If A happens, then B should happen. If B happens, then C should happen. And if C happens, I'm entering the trade. I don't care if it loses or wins, because our job is to identify the setup. Our job is not to make sure it's a win. Once we have done and identified the setup, we enter into the market, our work is done. It's your edge then does the heavy work after that, yeah? So what happens here is that this is the box. The 15-minute candle is from this point to approximately halfway through, and this is the wick of the next candle being created, right? So once I saw that there is definitely a trend established, and you can tell that this low, even if you look at the internal trend of the largest swing trend, this low was broken over here. If I were to just look at the internal trend there, and this again low got broken over here, there was a reaction from this zone, and then it fell down pretty strongly, went up back, fell down pretty strongly, and then came back up again. Now, for a fact, we know that this is a zone, right? This is a flip zone, in fact, because if I were to draw, where did this react from? It reacted from here, right? So this is a zone. This zone broke a structural level, so it is a powerful zone. It swept liquidity to the left, yes, and it had a good reaction, and then it got flipped. Once it gets flipped, I'm 100% interested in this zone for the next trade to take place, for price to move in and for me to look at my entry setups. And this is what I do, guys. I get trading opportunities pretty much on every 15-minute candle. I can, depending on my trade management style, I can let it run. I can partially close and let the runner run till the end of the session. I can pretty much look at every candle throughout the day to see if it is giving me a strong bias in a direction that I want to trade in, or a strong bias so that I can trade in that direction, given that my mechanical setup is presented here. So what do? The first thing is liquidation. So I get a liquidity sweep. And the reason why we need these liquidity sweeps is, again, go back to supply and demand, right? And we know that liquidity is where what moves the market. Now, if you have a lot of liquidity in the market, right? So think of the ranging market. So what is the ranging market? The ranging market is it's in that high. It's not breaking the high. It's not breaking the low. It's just ranging, right? When the market is ranging, we call it that it is highly liquid, because no matter what happens, there is always a seller or buyer on the other side willing to take that trade. Right? So if you're selling, there's a buyer on the other side. If you're buying, there's a seller on this side. Everything is considered fair value, and price is not moving anywhere. What happens is when these financial institutions come in and they pump in a lot of money, and you have that amazingly quick break to one side or the other side, that's when we know that that's a telltale sign, a footprint, if you will, that financial institutions have stepped in, or somebody with a whole lot of cash have stepped in, and price has gone one direction, and now essentially the market is imbalanced. And the reason why it shot in one direction is because it could not find, if it's a bullish thing and I'm buying, there is not enough sellers at that price point where everything is considered a fair value gap. So the price is increasing and it's filling orders as the price is going up. Yes, so we know that somebody has come in. Now, when somebody has come in, it obviously, within the chart that we're looking at, it leaves those footprints. And our job is to identify those footprints where price can essentially come back, right? So obviously, banks and financial institution want to get into the best price possible, and they need liquidity to move. And these inducements are highly valuable and important in order to drive the market, because when this structure, this strong high broke this low, yeah, this becomes strong, right? So there is potential that a lot of retail traders could place their limit orders at this point in time, right? And place their stop losses right above this. So what do the banks do is that they take their liquidity and then fuel it to go into the direction that they want it to go. So that is one setup, that you have your liquidation, mitigation of a zone that we are in, because I want to tap into those orders and then see if there is a reaction. And the reaction is important because it identifies to me that the zone is holding, right? If the zone is not holding and it just flies by through, that zone is weak and it's okay, right? We'll have another opportunity. Maybe this is a loss, I don't care, as long as I know that I am entering on a setup that gives me that edge over that long term, right? So there are a couple of ways you could have entered. You could have entered as a breakout on the reaction candle and covered the top, so now this becomes a strong high. Or you could have put a stop order at the breakout of this candle, anticipating that the next breakout, and you want to get involved, and you could have been in a very tight stop loss, or you could have placed and covered the zone. All of this we cover in this board, right? And all the entry models and the benefits and the drawbacks of each entry model, we cover that. Okay, so that is one trade. What about the second trade? Now, I told you before that the way the market is driven is always based on supply and demand, right? So when supply and demand interaction is happening, I get very interested to understand who's going to win. Is the supply going to take over, or is demand going to take over? Now, we know and we have established the fact that the trend is downwards. So my bias is obviously going down. And while the price is going down and the next candle opens up to create that break, I'm looking at a couple of things. Is there a zone that I could trade from first? And as price is moving in, has there any liquidity been taken, right? So if no liquidity is taken, or there is no strong high that could be swept, this high is not strong because it did not break anything to the left side, right? So it's just a weak high that got swept, and that doesn't mean anything. So as price comes down, moves back up again, now this low broke this high, becomes strong, and there's definitely orders in there. There is this is a newly created demand within those two 15-minute candles. Price comes back in. For sure, once price comes back in, what is this guy doing? This guy broke the order flow chain that created the OFC and left a footprint of a supply over here. So I'm at this point in time just waiting. There is a reaction going up to this supply, right? And then what I do is I want to enter at the breakout of the reaction if the reaction fails, right? So the topic of discussion is this: if the reaction or this demand zone or whatever you want to call this was strong, it should have created a new higher high, right? It failed to create a higher high. I saw that way coming in, then I want to get involved as this gets broken, because this low failed to break this high to create a new higher high. So I placed a stop order, and as soon as price tagged me in, we hung around for a bit, came back down, hung around, and then price went in the direction that we were anticipating. And the same thing happened here, right? So the trend is 100% bearish. Price goes up, there is definitely demand left. Price comes down. Where is it coming down? Leaving a footprint of supply. Price reacts from this demand, and I see it's failing to break to the top. So I place an entry as a stop order at the bottom of this reaction. Failed reaction because it failed to create a higher high. Now, if, for example, at this point in time, it does create a higher high, I immediately cancel my order, because the whole premise of my trade entry was nullified. You know, the supply did not hold, it got broken, this demand is strong, so I canceled my order, and that's that, right? So there are many ways you could have gotten involved in this. Again, I will say this, we cover all of these markups in my Discord. I will take you back to it again one more time. We cover this in euros, we have GU here, we have not much activity over here, but EU and GU quite a bit, and then gold. And all of these models are then captured as a daily markup, and I have hundreds and hundreds of markups that I put down here, right? And there are losers as well. So don't think this is 100% winning strategy. I wish we had that, but nonetheless. Anyway, guys, I quickly wanted to share this. If you liked the content, do subscribe to my channel, hit that like button. Obviously, it gives me that motivation to keep bringing this to you. And join my Discord, and we'll catch you there. You all take care. Bye now.